What I see happening is increasing pressure on state government due to three trends, and that'll make dealing with the tax issue even more difficult. The first trend is an increasing number of baby boomers becoming reliant upon government safety nets, not having saved enough, or if they did save enough, not getting respectable interest on their savings. The second trend is the fiscal mess in Washington that's going to ultimately have to result in some type of cut of aid from Washington to the states, and the states having to pick up the difference. And the third trend is an increasing number of children being born to folks who are financially or emotionally not able to support them, and those children needing to be supported by the state. So the idea is that there's going to be great pressure on an existing tax mechanism, and the thing is probably, even though we'd like to see it go the other way, going to be very difficult to hold the line, much less reduce the taxes, but that's the easy thing to talk about in state houses. When you begin to reduce that tax on the upper bracket, if you actually talk in terms of a reduction, that revenue shortfall has got to be made up somewhere. And that's what we're finding with the Modernization Committee. You can giveth, but then you have to taketh away from someone else. And there's not that many someone else's out there. You have the property tax folks who are complaining, particularly in the agricultural area, that they are getting the short end of the stick under the present model. And you have the sales tax burden, which falls primarily, whether you tax services or just tangible property, on the folks making $20,000 to $120,000 a year. And quite frankly, they can't handle much burden either. So it's, again, a nice thing to say, let's cut this tax if you're the one who's going to be favored by that cut, but a real hard thing to say, let's raise somebody else's tax. So it's a difficult situation, and one of the reasons why it's so very, very hard to do anything other than an incremental approach to the thing, studying one particular thing at a time and seeing what adjustments can be made. And perhaps that's a smart thing. It's a smart thing because if you make any type of major adjustments, and they turn out to be wrong, it's really hard to back up and redo it. A lot of business instability, a lot of accounting instability, a lot of overhead accompanies a tax change. And if you have to do an about face, that's an additional burden. And I think most businesses would rather have a stable situation in taxes than an unpredictable one. I'm not a big fan of corporate taxes. The dual tax structure where you're taxed on a dollar earned at the corporate level and then retaxed on it at the individual level is just really not a very good way to do things. I think we're seeing at the federal level a realization that our federal tax in this area is also too high. However, there again we get in a situation, $250 million in corporate taxes. Do away with the corporate tax, and you have to come up with that money someplace else. Cut the corporate tax, and you have to come up with that money someplace else, and that's where the rubber hits the road, to someplace else. A fair and modern tax system, I think, is one that, first of all, is able to pay the bills. Whatever bills that society says government should incur. It's got to do that, or it's not modern, it's not ancient, it's just not a good tax system. Secondly, it's got to try to attempt to strike a balance between not disincentivizing entrepreneurship, growth, and investment, with the other side of the coin, placing burden on people who don't have the resources to pay the bill. And that's an increasing problem. One of the things that make it an increasing problem is interstate competition between systems, everyone trying to one-up the other one, and also something that's far greater that overshadows it all, and that's the federal tax burden and the impact that has. So this is a complicated issue. So far, I think the study that the Tax Modernization Committee has done has indicated that Nebraska is not really out of line in any of the things. We can do some tweaking, but we can't work miracles. I think you'll see a series of incremental, well thought out proposals, probably along the lines of indexing the personal income tax brackets, maybe making the break in corporate tax bracket a little different than the $100,000 break now between when you shift from one bracket to another. I think you're going to see examination of how we tax agricultural real estate. How do you strike a balance between putting too much tax on the farmer who is not cashing in on the wealth of the increased valuation of farmland, as opposed to the person who is bidding up the value of farmland to levels far greater than what is economically reasonable. Right now, our mechanism of relief, which is embodied in the Constitution, says you have to treat both the same. And it may be time to look at least at a bit of a constitutional amendment that'll allow some directed property tax relief in particular situations where there's a really good case made for it.